Chapter 7, Learning Target 4 for the CP accounting class. Explain and show how accounting events are reported on the financial statements. So before we get going, we want to talk a little bit about the four major financial statements. And there are four of them. There's the balance sheet, the income statement, the statement of cash flows, and the statement of owner's equity. The statement of owner's equity can also be known the statement of retained earnings. Okay, but basically on your balance sheet, that's going to be your assets, your liabilities, and your owner's equity. Plus your owner's equity will get your assets. So your balance sheet is your accounting equation. Assets equal liabilities plus owner's equity. Your income statement is going to be your revenue less your expenses, and that'll get us net income. Your statement of cash flow is going to talk about cash received and cash paid from operating activities, investing activities, financing activities, supplemental information as well. And then your statement of owner's equity or statement of retained earnings, whichever one you want to use, that's going to give us our beginning equity minus our less our investments, less our withdrawals, plus our income to get us our ending equity. Another way to kind of take a look at this too is if you notice how they all are interrelated, the net income on the income statement will also be shown on the statement of retained earnings or shareholders' equity. If you notice that the cash at the end of the period, which is calculated on the statement of cash flows, will also be found on the balance sheet. If you also take a look, the ending retained earnings will also be used from the statement of retained earnings / shareholders' equity, will also be found on the retained earnings. So they are intermingled there. And you can see a couple things too to take a note of just for key points. Notice that dividends are listed on the statement of retained earnings. That's your owner's worth there. Notice our capital stock if you notice that our capital stock, it is going to be listed on the statement of stockholders' equity and the balance sheet there. So that's kind of a key thing there that I would take a look at. So let's take a look real quick and let's kind of test your knowledge for each of the following elements that follow A through F. Indicate in the space provided the appropriate number of financial statements where the element would appear. So we're going to use 1 for income statement, 2 for statement of shareholder owner's equity, 3 for balance sheet, and 4 for statement of cash flow. Cash balance in the checking account, okay, that's going to appear on our balance sheet and our statement of cash flows. Unused supplies, that's going to appear on our balance sheet. Merchandise sold on account, that's going to appear on our income statement. Stock issued, that's going to appear on our statement of owner's equity. Utilities expense, that's going to appear on our income statement. Taxes payable, that's going to appear on our balance sheet. So let's take a look too and kind of start maybe creating some of these income statements in here. So if you look over on the left, we have our adjusted trial balance for Wagner Services. We want to prepare the income statement. Now when we look at the income statement, you have to realize that our dividends have already been subtracted from retained earnings in the adjusted trial balance. So they are current. So our income statement. When we do our income statement, we're basically going to look at our revenue and our expenses. Okay, if you go back to your chart of your account, these are going to be our 400 and 500 accounts traditionally. So all we're going to do is we're going to take our revenue less our expenses, and we're just taking them right from that trial balance. So right here, so we're going to take service fee earned, that's your revenue account, okay, less your operating expenses. In this case, I'm going to list out my operating expenses. Okay, I have a total of $1,400 in my operating expenses. So obviously you can see here that my revenue is larger than my expenses, which is a very good thing. I have a net income of $4,400. I shouldn't say I do, Wagner Services does. And that's how you prepare an income statement. Okay, so now let's take a look real quick. Let's take the statement of retained earnings, and we'll compare that. Dividends have already been subtracted from the retained earnings in the adjusting trial balance. So we're going to take our statement of beginning retained earnings is 0. Okay, they gave us that in the previous direction. Our net income, in this case, our net income from right up above is $4,400, less our dividends. Our dividends is $2,500, which will give us an ending retained earnings of $1,900. So let's continue on. We're going to look at Aaron Distributing Inc. and let's create a balance sheet for them. Now for our balance sheet, remember it's our assets and our liabilities and our owner's equity. So what we're going to do is we're going to take a look at the ones in the green. So our assets are going to be our cash or accounts receivable, prepaid insurance vehicle, accumulated depreciation vehicle, office equipment, and accumulated depreciation office equipment. Now we do have that accumulated depreciation. Those are contra asset accounts, and they are designed to lower the book value of the vehicle and the office equipment. So it's important that we include those into that balance sheet. So we add them all together, and basically we get a total assets of $44,940. Then we're going to take our liabilities, and we need to we'll take a look at those, and those are the yellow ones. That's our accounts payable, notes payable, wages payable. We'll add them all together, and we get $11,600 for our total liabilities. Our owner's equity now in this case is our blue one, which is our capital stock and our retained earnings. Okay, so our capital stock is going to be $25,000, and our retained earnings is going to be $8,340. So therefore, my total owner's equity is going to be $3,340. Now, if I add it all together, if I add my liabilities with my owner's equity, voila, by the magic that is accounting, you'll notice that my assets of $44,940 equal my total liabilities plus my owner's equity. Now, let's take a look at one more little transaction before we finish up here. Monger Corporate Company has the following information available for its most recent fiscal year. They use the relevant information to prepare the income statement or statement of cash flows. Ignore the beginning balance for the year ended July 20XX. So, income statement, once again, is revenue less expenses. So let's just kind of find our revenue ones and our expense ones. Okay, so these are going to be our revenue and expense ones we're going to use. So our sales is obviously going to be our first one, and that's going to be $85,000. My interest earned, which is a revenue account, is going to be $200. Less my operating expenses. In this case, my operating expenses are wage expense, depreciation expense, and rent expense, totaling up to $72,300. So my net income in this case, if I take my revenue less my expenses, my net income will be $12,900. Well, let's continue on. Let's do a statement of cash flows for them. Okay, so we want to find basically what is going to be where are our operating cash flows. Anytime you see basically your statement of cash flow is going to predominantly dealing with cash in and cash out. So that's going to be your indicator on which of these transactions you're going to use. So our operating cash flows, well, our cash received from customers is going to be our operating cash flow, $6,500. Cash paid for supplies, that's operating. That's on a day-to-day basis. That's going to be less $12,000. Okay, and cash paid for insurance, that's an operating expense, in this case is $4,800. Our cash flow from operating, well, in this case we have a positive net cash flow from $48,200. So what's our financing cash flow? How much money do we have coming in and going out for financing? Well, cash we received from owners was $80,000. That was good. Cash received from borrowing people was from borrowing, so like loans we acquired or whatnot, or notes or whatnot. Is $40,000. So our net cash flows from financing is $120,000 rather. So my net change in cash flow is the $48,200 plus the net cash from financing, which is $120,000. To get my net change in cash is going to be $168,200.